Hey guys, it's Aman
And Christina
from Our Rich Journey. Is investing gambling? How it is and how it is not. This is something that comes up all the time when people talk about reasons why they don't invest in the stock market. They feel like they are gambling with their hard-earned money. And that is a fair thing to say because in reality, there are some key similarities between gambling and investing. But there are also some very specific things that help separate the two. Things that make the difference when it comes to building wealth by investing in the stock market. You know, Christina and I, we are millionaires thanks to our investments in the stock market. And as we built our wealth, all of those investments never felt like gambling. And so it's so important that we have this conversation, that you understand these differences before you put your hard-earned money to work in the stock market.
So before we go any further, let's first go into some definitions and we'll start with investing. So investing means placing your money into assets like stocks or real estate based on what you've learned or expect about the future, hoping that over time you'll earn a return. While optimistic, there's always a risk of losing some or all of your investment. Now, the definition of gambling. Gambling involves staking your money on events or games based on predictions or feelings about the outcome. The aim is a swift reward, and despite hopes of a windfall, there's also always the risk of losing your money. Now, both investing and gambling involve the hope of a higher return on your money, decision making based off of information or intuition, and inherent risk. So because of these fairly similar definitions, it's no wonder why sometimes people get gambling and investing conflated.
So where is all of this coming from? And this is why we need to dig deeper into the similarities and differences between investing and gambling. Let's start off with the similarities. Number one is the uncertainty and risk. Both carry inherent risks and uncertain outcomes. Number two are the potential for gain or losses. Whether you're buying a stock or placing a bet, there's always this potential gain or loss. The next is emotional appeal. Both can trigger emotions like greed and fear. The next similarity is that with both, you can grow your money with minimal effort. Think about passive investing in something like index funds or sitting at a blackjack table and just asking the dealer to hit you one more time. These are relatively easy things to do that require minimal effort. And finally, the last similarity is accessibility. Anyone can invest in the stock market on their smartphone, on their computer. It is very easy to start investing right now. The same can be said about gambling. You can open up an app and place a poker bet or bet on the World Series or the NBA Finals from the comfort of your home. And so it is these similarities that people tend to focus on when they're thinking about the difference between investing and gambling. But it's the differences that play the more important role when it comes to building your wealth.
The first difference is research and analysis. Now, you can be a gambler or an investor and do your research, but the depth and the scope of your research can be very different based off whether you're an investor or a gambler. Now, if you're an investor, investment research delves deeper. So you're assessing factors like a company's financials, industry trends, management capabilities, and competitive standing. This rigorous analysis aims to gauge an asset's intrinsic value. Now, in terms of the breadth of data, investment decisions pull from a vast pool of data, including macroeconomics factors, industry challenges, geopolitical influences, and technological shifts.
Now, on the other hand, think of the research that a gambler does. Does it have the depth and the breadth that an investor has when they do their research? I mean, if you're playing the roulette table or what's that thing that they pull down like this?
The penny slots.
If you're playing the slots, what type of research are you doing in that regard? Maybe if you are a gambler that focuses on sports teams, still, the depth of your research is still minimal. It's not as comprehensive as someone that is researching a company. Maybe you're looking at someone's batting average or how many games they've won in the last couple of days or whether or not players are hurt or not. This type of information is not consistent. unlike the information that is provided in a financial report or on an earnings call for a company that you are considering investing in.
And another big difference is time horizon. When we talk about investing, we're always talking about investing for the long term. And successful investors really focus on long-term investing. But gamblers have a much shorter time horizon. Their focus is really on immediate or short-term results.
And immediate and short-term results can be very inconsistent. On the other hand, someone that places money in the stock market for 10, 15, 20 years, if you look at the returns of the stock market over those periods, you can see that those investors have made money. Now imagine someone that is gambling. Have you ever heard the term, the house always wins? That's because a gambler that continues to gamble, even after winning a little bit of money, the longer they gamble, the likelihood of them losing all of their money goes up.
Now, another key difference is with investing, you can do continuous monitoring and adjustments. So for example, we talk about having the proper allocation with your portfolio. We talk about rebalancing. When you are a gambler, that goes out of play after you place your initial bet. You really lose that ability to adjust after you make your bet.
And finally, the key difference is your ability to control your emotions a little better when it comes to investing. And we're going to talk about this in a moment. But the idea is that when you are an investor, you have this ability to set up your investments on cruise control. You can dollar cost average into the stock market on a weekly or monthly basis by just pulling funds from your checking account or going directly from your paycheck. This takes all of the emotion out of investing. Now, on the other hand, when a gambler places a bet, they are not dollar cost averaging through their paycheck. It is not an automated process. It is something that they are manually doing themselves in real time, placing a bet on their phone or in a casino.
Now, I think what's interesting about a gambler is that there's far more emotions tied to gambling. Now, there's this saying that people hate to lose more than they love to win. And I think that's so well tied into the gambler's perspective. As they begin to win, they try to win more. But when they lose, they really try to come back from that loss. And that can put them in a deeper hole. And it's so intrinsically involved with how they're feeling emotionally as they're gambling.
So these key differences between gambling and investing is what sets them apart and what we feel makes investing such a powerful form of building wealth over the long term. Now, with that said, there is a problem with investing when investing starts to become gambling. Now, this can happen quite easily because of something we call the thin line between investing and gambling.
So where does this thin line exist? Well, the first place is when investors are making reckless investment decisions. So they're making impulsive decisions without doing any type of research. This is where investing can be very similar to gambling.
The next way investing can become gambling are for the people that are making day trading type moves, that are making these short-term investments based off of what is going on in the current news cycle. Maybe they open up their computer, they see something on the news, and they buy it because of some fad that is taking place, with absolutely no intent on holding that investment for the long term. So making investments based off of the short-term fluctuations in the stock market is another form of gambling. Now, in order to maintain this clear line between investing and gambling, it's so important that investors take on investing in a responsible way. And this means investing with an investment plan, a plan that lays out when you're gonna buy, when you're gonna sell, that has your goals and objectives for all of your investments outlined in one particular plan that you follow day in and day out.
You also want to be continuously learning. Financial literacy does not just stop at a certain point. There's always constant learning to be made. So as you're investing, make sure that you continue to read up on your investments. Make sure that you're listening to podcasts, watching YouTube videos, reading books about investing. Just stay up to date with your financial literacy. And I think these things are really important because all of these things can help you avoid rash decision making, which can push you further towards that gambling line that you want to stay away from.
So with that said, we hope that we've given you enough information so that when you are thinking about investing, You have the confidence to invest knowing that you are not gambling. In fact, you are building wealth for a better tomorrow. And so if you've liked this video, please give it a thumbs up, subscribe to our channel, and
Join the journey.
So thanks for watching our video, but before we let you go, we wanted to let you know that our year-long action-oriented program for pursuing financial independence and retiring early is open now. Our 365 Days to FIRE program. It is a one-of-a-kind program that helps you get closer to your financial independence and retiring early goals. And so if you are interested in this program, please go to 365daystofire.com and check out everything that this program has to offer.
Yes, please check it out. We're so excited to be going into our third year of this program. As part of the program, we have exciting in-person meetups here in Portugal. We have people break up into smaller accountability groups and do activities with their groups. You have daily FIRE tasks. You have plans that you create. You create an entire FIRE plan that includes your stock investing plan, your real estate investing plan, your estate plan, your side hustle plan. Every single plan gets accumulated into your FIRE plan. And we also have a coaching plan as part of this program where you can get feedback from us. We review your plans and you can ask us any of your FIRE related questions. So again, if you are interested in signing up for this program, enrollment is open now. You can go to 365daystofire.com and we'll also leave a link in the description below.